Welcome to the deep dive. Sometimes investing, it can feel a bit like trying to navigate a dense jungle, right? So many paths, potential pitfalls. But what if there was a clearer way, a simpler path, maybe?
Hmm.
A tool designed to, well, cut through some of that complexity and really help streamline building your wealth.
That's exactly what we're going to get into today. We're talking about the exchange traded fund, the ETF. And you should think of it less like just another product and more like a strategic cornerstone.
Mhm.
It can bring some incredible efficiency, diversification, and actually a surprising level of control to your portfolio.
Okay, efficiency, diversification, control. Let's unpack this then. Today we're aiming to cut through the noise, really pinpoint 5 key strategic advantages of ETFs, why they aren't just, another ticker symbol. We want to show you why integrating these into your strategy could actually be one of the smartest moves you make for your financial future. So let's start at the beginning. If we're building a portfolio, one that we hope can kind of weather market storms, what's the absolute foundation? It's got to be diversification, right? Genuine diversification. Spreading risk, aiming for that long-term stability. And this is where ETFs, well, they really shine, don't they? Imagine this. You buy just one single share of an ETF, and instantly, you're not just holding one stock. You've got exposure to a whole basket of assets underneath. That could be, say, a broad market index, hundreds of stocks, maybe even thousands, or it could be bonds or even commodities.
Exactly. And the implication there, well, it's pretty powerful for your portfolio's strength. I mean, most investors get the idea of diversification, but an ETF makes it instantly actionable. With just one transaction, you can spread your risk across different sectors, different countries, maybe even different types of assets. So this structure, it inherently means your money isn't all riding on one horse, so to speak. It spreads the risk, makes your overall position much more resilient. It's kind of like building a house with lots of different strong materials, not just, one single beam holding everything up. So what does this mean for your portfolio's actual strength day to day? It means robustness.
That makes sense.
Yes.
Robustness through diversification. Okay. But, we've talked about building resilience, but what about things that can quietly eat away at your wealth? We'll talk about costs, fees. They can be, a silent drag on growth. And that brings us nicely to our second big advantage, cost efficiency. A lot of ETFs, especially the big index ones, use what's called passive management. They're basically designed to just track an index, mirror its performance. They aren't trying to constantly outsmart the market, just match it.
Right. And that operational simplicity, that just matching approach, it translates directly into lower costs for you, the investor. We're talking about the expense ratio, that annual fee. For many ETFs, it's significantly lower compared to, say, actively managed mutual funds where you have managers actively picking stocks. And what's really crucial here is that minimizing that drag from fees means more of your money stays invested. It stays in your portfolio, working for you, compounding over time. Think about that impact over 10, 20, 30 years. It's really a strategic choice, Prioritizing the growth of your actual capital by cutting down those unnecessary costs, it just lets your money work harder.
Less friction, more growth potential. I like that. Okay, so lower costs are great. But what about actually buying and selling? How flexible are these things? That leads us to advantage number 3, the real-time trading flexibility. This comes down to how ETFs are actually traded. It's quite different from traditional mutual funds, isn't it? Mutual funds, they price just once a day, right?
Yeah.
After the market closes. But ETFs, they trade on the stock exchange all day long, just like individual stocks.
Exactly. And that's a key difference. That real-time pricing, the continuous trading, it gives you, the investor, agility. You can react to market movements as they happen, not hours later. So what kind of control does this give you? Well, say the market takes a dive mid-morning. You could potentially buy more shares at that lower price right then, or if you need to sell, you can do it immediately. You can rebalance your portfolio, try to capitalize on those intraday swings, or just adjust your holdings when you decide it's right. That level of control and responsiveness, well, it's pretty invaluable in today's markets, which can change fast. It puts you more in the driver's seat for timing.
So more direct control over when you buy or sell. Okay, that's definitely a plus. Now, let's shift gears a bit to something super important, but maybe less glamorous, taxes. Tax efficiency, that's our fourth advantage. And ETFs often have a real edge here. It comes down to their unique structure, how shares are created and redeemed.
Right. It's a bit technical behind the scenes, but the direct impact on you is what matters. ETFs typically distribute fewer capital gains to their shareholders compared to many traditional mutual funds. Now, capital gains, that's the profit made when the fund sells assets that have gone up in value. In a mutual fund, you often get those distributions annually, and you have to pay tax on them even if you didn't sell any shares yourself. With ETFs, because of that creation and redemption process mostly involving large institutions, the fund itself often doesn't have to sell underlying stocks as frequently just to meet shareholder redemptions. This means fewer taxable events are passed along to you. So you often have more control over when you realize capital gains typically, only when you actually sell your ETF shares.
So you potentially defer those taxes until you sell.
Often, yes. And that deferral lets your money compound more effectively before taxes take a bite. Looking at the big picture, this inherent tax efficiency can really add up. It significantly boosts your long-term after-tax returns. Your wealth grows more effectively because less is being skimmed off for taxes along the way.
That's a subtle but potentially huge benefit over the long run.
Okay, makes sense. And that brings us to our fifth and final advantage, accessibility. Getting started. Historically, getting a really diversified portfolio like the kind institutions use often required a lot of money up front. Big minimum investments were a barrier for many people. ETFs really changed that game, don't they? How easy is it to actually buy one?
It's remarkably accessible. Typically, you can buy as little as a single share of an ETF. And with share prices varying, that means you can often start building a diversified position with, well, a relatively modest amount of capital, maybe $50, $100, depending on the ETF.
Just one share to get started?
Often, yes. This low barrier to entry, it really democratizes investing. It opens up sophisticated strategies to almost everyone. It means you can start building a robust, diversified portfolio piece by piece, strategically, even if you're just starting out. You don't need a fortune to begin. It really fosters a much more inclusive environment for building long-term wealth. It puts powerful tools in your hands, regardless of your starting capital. Okay, so let's quickly recap then. We've hit 5 key strategic advantages for ETFs. First, that engineered diversification for resilience. Second, cost efficiency that helps amplify returns. Third, real-time trading flexibility for more control. Fourth, optimize tax efficiency to keep more of your growth. And fifth, those accessible entry points, making it easier for anyone to get started. Taken together, these really empower you as an investor, don't they? They change how you can approach the market.
They absolutely do. It's a compelling combination. Strategically including ETFs in your investment plan, while it offers this blend of diversification, low-cost control, tax smarts, and accessibility, it really allows you to approach investing with a calmer, more strategic perspective, we think. It helps set the stage for potentially more sustained wealth growth over the long haul. You feel more empowered, more deliberate.
So the final thought for you, our listeners, maybe to consider these specific attributes. How could this blend of diversification, cost savings, flexibility, tax advantages, and accessibility fit into your financial journey? What new opportunities might this understanding of ETFs unlock as you manage your wealth more thoughtfully, more confidently moving forward? Something to think about.